Hello guys. In this video I will try to make it easy for you not to search, not to go to Google, because everything you are searching is in this chart that I am using, and this is the chart that I am trading with, and this is the chart that I am explaining to my students, and everything is in the chart. Okay, we have spoken last video or last lesson about ETFs, exchange traded fund, and we say an ETF tracks an index. What does it mean it tracks? It means what does the index do? The ETF do. But you can't buy an index, but you can buy something that tracks the index, which is called ETF. In this video, I will try to show you how to go from my chart and how to find ETFs. Okay, so just go to my chart here on the blue thing that you see here, and then click this thing here, and then you have a menu, a very long menu. Here you see ETF at the end. You click on that. Okay, the ETF that you see here, we have a lot. Okay, in each ETF it shows you the stocks that belong to this ETF. Okay, so you can just take anyone. I will try just to make it easy for you, since it's the first. We have a lot of ETFs. So as you see here, when you go down, you can see that much. So it's a lot. Okay, it's a lot. So let's okay, let's go down, or go up, just to give you an example of this kind of ETFs. And okay, just an example. Okay, a check here. It's called First Trust Nasdaq 100 Technology Sector Index Fund ETF. Okay, what does it mean? It means we should see 100 technology stocks from the technology sector. 100. So when you click on that ETF, it will show you 100 stocks that belong to this. Okay, all these are the stocks that belong, like Google, like this one, NTES, Baidu. As you can see, all these belong to technology stocks, as they say, and they are put all together. Now, what is the utility of this? The utility of this is you have just an idea what are the stocks that are in. If you are not interested in to know what are the stocks, and you want just to follow the index or the ETF, you can just do that by following the index. Here we have blue chip ETFs, EG shares. You click on that. Okay, here it seems that there is nothing. Now you can go down. So 400 ETF, Dow Jones Global Yield ETF. There are a lot of this ETF, and you just go and search whatever you want. because some, like here, they have a dividend growth stocks, and we have a lot, and it's up to you if you want to buy this these ETFs, yes or no. Okay. Now, a lot of people, when they buy this kind of stocks, of these ETFs, now what's the thing they want to do? They want just to follow an index. Okay? They know the index. They want just to follow it. And especially when you know the index very well and you see how it moves. For example, when you see the index is very good and it's going up and you can make money, you just buy the ETF that corresponds to it, and that's it. And you just leave it for 1 month or 2 or 3, and then if you are right, you will see that you are making a lot of money from it without buying stock by stock as we do in swing trading. But understand that the ETF has some fees. Okay, it means they take from the ETF price. It means instead, for example, of having $100 a share, let's say you find it 99, but normally it's 100. Now they take this 1%. It is because of the fund itself. It takes some money from the fund, and this is how the fund managers are paid. Okay, so understand that it's not like the stock. When you buy a stock, there is no fees. It means if the stock is $10, it goes to $20. You get all that money without cutting off any dollar or any cent from it, except from the commission that you pay. That's it. But in ETF, understand, the ETF and the mutual funds, they have fees. Like if you have, let's say you have a 401k, understand that each year they take money, management money from your 401k. Understand that. So the 401k, for example, it doesn't work by itself. There are some people who manage this, and they will be paid. And they will be paid by taking percentage of all the money of the 401k. Okay? So as I told you, you just go there, click on the ETF here, and just go down like this. And we have even diamond. It's just names of companies like this, and you, by seeing the chart, these charts are different. It means these guys, they are just putting stocks together, and they give them a name, and that's it. Okay? But you should always go to this ETF at the end here in the chart, and just go and search for whatever you like, and just try to see it, to see the stocks that belong to. Okay, it's a lot. For me, as a swing trader, most of the time I don't trade ETFs. I can trade them, but I don't want to trade them. Okay, I always trade stocks because they have no fees, and they can go faster than ETFs, because ETFs are, as I told you before, are the average of what all the stocks have been doing. Some stocks doing good, others they do bad, so you get the average. Okay, so it is as if you are making a mutual fund for yourself. So you buy an ETF of the whole market, or an index, or a sector, and you just go and sleep for 10 years or 20 years, and then you see if you are right or not. Okay, thank you very much for watching. If you have any question, as usual, subscribe. Thank you very much.